Started. Okay. So good to be with you guys. How you guys doing? And we're gonna do our Bulls versus Bears. Man, what an exciting market we have. We have the Nasdaq up and S&P. Also, we see the dollar selling off, and we see uh, Euro and Aussie moving higher as well. So let's go ahead and we'll start off with the news for next week. We're actually going to go to my favorite tool. We're going to go to my market heat map, an arrangement of currency pairs by percent exchange. And there's a beautiful economic calendar, which I'll go ahead and share with you. Let me go ahead and share. I can share my market heat map, the trader's best friend. And we'll go ahead and share that. Okay. Okay. So this is my market heat map. You can go to mymarketheatmap.com, absolutely free, or you can actually get access to the full tool, which has many tools within it. But you can just scroll to the front, and we can see that the Kiwi dollar is up 0.65%, and we have Aussie dollar, Euro dollar, pound dollar, all the pairs versus U.S. dollar. Dollar's getting slammed right now, and we did have a release of some PCE data, so we have some inflation data. We'll talk about that as well. But heat map is my favorite tool for seeing what's hopping, what's popping, what's dropping in the Forex market. Go to www.myforexheatmap.com. I developed the tool with the help of some developers. To basically, it's real simple. Green is an uptrend, red is a downtrend, gray stay away. And on the front, there's a powerful tool. We're going to go ahead and look at the heat map. We're going to look at the high impact items. The news drives the market, guys. We're trading in our 30-day challenge that ends this week. We're going to start our challenge for June. But we were sitting in the market. The market was very flat, not moving very much during during London session. We got a short. We shorted the euro, made some pips there. Shorted the Aussie, made some pips there, but really didn't move a whole lot. It wasn't until the economic data that came out at 8:30 Eastern time, which really drove the market and really saw a big move. So if you are trading and not looking at the economic calendar, you're really doing yourself a disservice. Okay. So let's go ahead and jump into it. In fact, we had our core PCE, we had the inflation data. The inflation data, the Fed, which controls the interest rates, and interest rates are one of the major drivers of currency values. They look at the inflation numbers, and if they see inflation is high, what they usually will do is they will hike interest rates, and interest rates makes the currency more valuable, right? However, if they see inflation is lower, they have, maybe a reason, or they might see some weakness in the job market or some weakness in the income market. Then they'll probably say, hey, we need to cut interest rates in order to help growth and to help the economy, right? And if one country's interest rates, when one country cuts interest rates, it makes their relative value of their currency lower than the other one. Well, that's when we trade foreign currencies, we trade one currency versus the other. A little teaching moment here, a little pro tip. So if we see a weaker economy, well, they'll have to cut interest rates. If they cut the interest rates, it'll make the currency worth less. So if you pair a strong currency with a weak currency, you get an uptrend, right? You get this blow up upside, right? So we had the core PCE released today, 8:30 a.m. Eastern time. Previous number is 3.2, forecast call for 3.3, and it came out as expected. So there was really not much change there. But personal spending is where we see the rub here. And this is the data for this for today. Previous number was 1%. That's personal spending. Spending on food, on clothing, on cars, on toys, on electronics. Before it was 1%. Now it's half as much. Because why? If you're paying $8 a gallon for gasoline, if they're in my home state of California, well then that's the problem, right? You have the price of gas and fuel taking up and causing prices to rise everywhere. So now you have personal spending that's down. That's going to trickle through the economy, because if people aren't able to buy things, it makes the economy slower, right? And it'll make the economy weaker, and then the value of the currency, which is like the stock of a country, right? The value of that currency falls. So we have this here. Then we have personal income. Okay, before, hey, 0.5%, you get an income, but then the forecast call for, oh, but it might drop for a little bit, 0.4. It actually was zero. Okay, so personal income month to month did not increase. And so it was zero. So now people have less money to spend with higher prices. That's a formula for like, oh, snap. That sucks, right? So then you get core PCE. And this is our inflation index that the Fed, the preferred inflation number that the Fed looks at. And they see that inflation actually has fallen from 0.3% to 0.2%. Well, there's no need to hike rates because the inflation, the index month on month is actually lowered to actually their target, their 0.2% target, right? And then jobless claims, we had 210,000. They expected to maybe take up to 211. Well, guess what? Surprise, surprise, 215,000, right? Probably if people are buying less things, well, then companies don't make as much money. And then we see higher unemployment, right? And so guess what? That all was a big formula. And we can look at the Aussie dollar. We can look at some of the, we actually got long there, and we see that, look, we got higher prices of the Kiwi dollar and gold, everything's spiking up. But you see the US dollar, it's going into the toilet, right? And that's how the economics ties in with driving the currency, right? So you can kind of forecast, like that's what we look at. By looking at this, they tell you what these numbers are going to be ahead of time, or their forecast is going to be, and then you can look at the currencies and look at the charts and then coordinate. And that's how we trade. And that's how we teach people how to trade at Elite Traders University. If you ever need a mentor, if you're ever looking at that, go ahead and reach out to me. You can type a message right now. It'll come right through to me. If you're on YouTube, or if you're on school, if you're watching this on school, okay. Oh, you can't see this. Let me go ahead and I want to stop sharing. And you probably let me share, and then go ahead and share this chart here, right? Because there we go. So we can actually see that this is the dollar index. This is the U.S. dollar index. It's a 5-minute chart. We can see that the dollar has fallen off this falling. Why? Because we had that weak economic data that I just showed you on the heat map, right? And this is the euro and the other currencies are kicking butt right now. We can see that higher highs and higher lows. We got a breakout there. Aussie dollar breakout. We're already long the Aussie dollar. We can already see that as well. Okay. So again, the economic calendar makes a big difference. So let me go ahead and go back to sharing the economic calendar. We're going to jump back over there. Right. So here we go. So this is so we have some economic news tomorrow. A lot of Canadian data, but we're not going to talk about that. We're going to talk about next week, which is going to start Monday, June 1st, and that's going to start off our challenge, our June challenge, our trading challenge. So if you want to be part of that, let me know. It's for $127, you'll get to work with me for 3 trading sessions during Asia session, and then get access to a suite of tools, and we give you a really cool spreadsheet. Take you from $50 to $15,000 in 31 days. And so we had a number of people complete our challenge, which is very cool. And we got some people that only made it through halfway and got their money back, which is pretty cool as well. Okay, so let's go ahead. High impact items. We have some Swiss data, growth rate, but let's focus on the bigger currencies. The euro. We have global manufacturing PMI expected to fall 52.8 to 48.9. And remember, we've got the Iran war that's going on. The elephant, the 10-ton elephant in the room is the Iran war, which is weighing on global growth. It's weighing on. So we're going to get a lot of negative numbers coming out, and so we have seen the U.S. dollar actually rally as people run from this negative data, and they'll hide in the U.S. dollar, right? Until we get U.S. data, which is negative, and then we'll run back the other way, right? So we've got some European data. When you see the flags, there's France, Germany. They're all part of the Eurozone. So we're all going to look at the Euro. And we got some the S&P Global Manufacturing PMI finals. Supposed to drop from 52.8 to 48.9, 51.4 dropped to 49.9. Unemployment rate supposed to tick up from 6.2% to 6.3 for the Eurozone. That's going to be released at 5 a.m. So we might see some volatility in the market at this time, right? If you ever watch Trading Places, this is the crop report, right? We have a crop report, every day at 8:30 and 10 and 5 a.m., right? ISM Manufacturing PMI, 52.7, supposed to drop to 52.6. If we get a better number, it might actually be a benefit. It might benefit the euro. Good U.S. economic data usually benefits the euro as well. Core inflation rate year on year, flash, is supposed to rise from 2.2% to 2.3. Then we have CPI, flash CPI, it's supposed to rise from 103.04 to 103.2. Inflation rate month on month is supposed to actually drop from 1% to 0.2. Inflation rate year on year flash is supposed to actually rise from 3% to 3.4%. Now, remember, when you got a little quandary there. So, Greg, seems like the inflation is everywhere. It's up and it's down. Well, if you take out food, if you take out energy and food, or take out energy, things actually might have lower inflation because people don't have enough money to buy anything because they're spending all their money on gas, right? So other prices of other products start to fall because, hey, no one's buying our stuff because of. But then you have some things in which, hey, we had to ship this on a truck and the truck charged us more money. So because the gas of the diesel fuel is like $8 a gallon, right? And so sometimes you might see prices of some items actually go up because of the transport costs. But if no one's buying it, they don't care about the transport costs. It's too high. They're not going to buy it. So in order for you to sell it, you still have to cut the price. So you might see something weird going on where, hey, why is inflation going down in some areas when we have high prices on fuel? And it's for that very reason. If no one's buying your stuff, it's all about supply and demand. If no one is buying what you're offering, you have to lower your price, right? So that's why you're seeing some of these mixed numbers on some of these things, right? That the market's going to react to. We have lots of Australian data coming out. Capital expenditure, consumption, growth rate. They don't give a forecast. We just look at the previous numbers, but really don't have to worry about the numbers. Really, you want to see the flag, right? If you see the flag, that means that during this time period, the hour or so, hour, 2 hours, even following the announcement, those currencies are going to be active. So if, I'm not going to go trade, CAD yen or pound yen during this time. Why? Because most traders are going to direct their attention to what's going on this calendar. They're going to be directing it to the Australian dollar because of the flag, right? I call it fund with flags. You can fund your account, your account with looking at the flags, right? So this tells you what to trade and what to look at. Look at Aussie Swiss, Aussie CAD, Aussie yen, right? Look at the Aussie family. Now, prices can become volatile during the news announcement, so you might not want to trade before the announcement. But after announcement, it's going to be, you're going to find some great opportunities to trade after the announcement, maybe a half hour afterwards, right? Because the news is like a big rock, and when it hits the water, it creates these ripples in the market, right? Now, if you've ever been into a currency in which nothing is moved, right, it's probably because there's no interest. If you look at the economic calendar, there's like no interest because there's nothing going on, right? And so this is how you can be in a currency and not get stuck, right? So if you see flags that are not the euro, okay, like this is a French flag. Well, the French used to have a currency called the franc, but now they use the euro. So if you see the German flag, that's the euro as well. And so you have S&P Global Services. That's all going to be about 4 a.m. Eastern time, 10 minutes to 4. And then you're going to have ADP employment change on June 3rd. And this is very important. This is jobs number, and usually it comes before non-farm payroll, gives us an indication. Non-farm payroll is one of the most watched economic indicators in the world, because if U.S. consumers are working, they can buy stuff. If they can buy stuff, that's going to impact the market, right? The global markets, people who export to us. So 109,000 jobs supposed to drop to 75,000. That could be negative. But if it's higher than expected, which is it has been surprising, then you could see a big rally in the market, because sometimes these guys who forecast, their job is to forecast, looking at piles and piles of papers and analyzing things, and they come up with the wrong number sometimes, right? And they've been coming up with the wrong number a lot of times. A lot of it's politically motivated. They don't want to see the government succeed, or they have TDS, they have Trump derangement syndrome, and so they've been throwing stones at the stock market, at the currency markets, at the U.S. dollar, at the troops, because they're just politically motivated. Now, if you trade politically, you're going to lose money, because woke equals broke, right? So I don't mean to offend anybody, but all I care is about the money, right? I used to vote a certain way, but when my company was impacted, I switched parties. So I'll just let you kind of guess where I lean, right? Come on, Eileen. Hey, oh, Eileen, right? So anyway, it's nothing personal. It's all about the money, right? And if somebody impacts my money, I'm going to cut them away from me, right? All right. Look at Thursday. We've got some Swiss unemployment rate. Don't necessarily, a lot of people don't trust the Swiss franc after what they did back in 2015 or so, when they depegged their currency from the euro without telling anybody, and caused the Swiss franc to appreciate like 1,000 pips in about an hour. And so a lot of countries, brokers, they just don't trust the Swiss franc. So if I see Swiss data, I kind of ignore it. But we do have initial jobless claims, 215,000, and we have no forecast there. And then Friday, this is going to be very interesting. You're going to have some great stuff coming out. You're going to have GDP growth rate. The Eurozone is supposed to actually drop from 0.2 to 0.1, and the growth rate year on year, 1.2 to 0.8. Then you have average earnings month on month, supposed to actually rise from 0.2 to 0.3. And then non-farm payrolls is supposed to drop from 115,000 to 96,000. Then you have the employment rate supposed to remain unchanged at 4.3% out of the U.S. This is very important data. This June 5th, mark it on your calendar at 8:30 a.m. Eastern time, will be one of the most important parts of the market, most important announcement. This is the crop report from Trading Places. If you haven't seen Trading Places, I know the movie is almost like it was 40 years old, but I tell you, there's a lot. If you're a trader, pop it on. It's a comedy. It's Eddie Murphy. If you like Coming to America, this kind of like precedes that. It's like a prequel, because you'll see those two old guys on the street, and Eddie Murphy gives them money in Coming to America. Well, those guys are in Trading Places, and they're rich. And so it's kind of cool to see that backstory. So if you're a big Coming to America fan, you'll be a Trading Places fan too, okay? And so we have Canada data coming out. Their unemployment rate, 6.9%. They should become another state, right? Participation rate supposed to rise from 65% to 65.1%. Employment change. Actually, they're going to improve on their employment. Went from negative 17.7 thousand to 8,000, right? So that's an improvement. IV PMI, 57.7. That's the Purchasing Managers Index PMI, supposed to go down to 51. And so that will conclude the data, the economic data for next week. Okay, so let's go to the technicals. I know I was using my technical chart there, and we're going to actually go here, and we're still long Aussie dollar and making some money there. We're going to go to our Bulls versus Bears template. Let me go ahead and share my screen and get to that. Okay. We'll get to the charts. We'll get to the charts, right? You guys are tired of looking at the fundamentals. The fundamentals. And let me remove all drawings and share my screen again. Let's go ahead and share. And we're going to share some audio too, right? So we got to get our bulls versus bears. And let's do it, right? Are you guys ready? Are you ready for some technicals? Okay, getting set here. And our computer is going like, what are you doing to us, Greg? Okay, let me get rid of all the indicators, remove all the drawings, right? We're gonna start the US dollar index, the dollar index, right? And there we go. We have the US dollar index. Let's get to it, right? Is this we're going to look at the we're going to start off with the dollar index. The dollar index is the basket of currencies versus the US dollar. Can't really trade it, but we can, well, if we understand where the US dollar is going, we can understand where seven currencies are going, right? Because they're all traded versus the US dollar. And we can see that we had an uptrend, higher highs and higher lows, right? But we also have a downward trend line that we kind of broke through, and so kind of hovering in this little indecision zone. But we were making some higher highs and higher lows. Dropping down to a 4-hour chart, though, we can see that we hit that trend line that was created by these 2 high points there, and then price reacted and hit that trend line and broke and hit it itself, right? And that's why we have euro dollar up and gold up and Aussie up and pound dollar up, right? We have everything up, right? And then oil is priced in US dollars, but the oil is based on geopolitical unrest right there. But look, the US dollar, the FXCM US dollar index is down, dollar yen is down, the dollar index is down, dollar CAD is down, and dollar Swiss is down. So notice how these currencies on the right-hand side are all gathered together, and you can see that the dollar has taken a hit. Overall, we have a rising uptrend, but we also have this. It got slammed with a engulfing, almost an engulfing pattern, right? Go down to a 1-hour chart, and we can see that but we are bouncing off support, so we're wondering if this will continue. We're in this downward move, but we do have old support created by the lows that we hit back in May 6th. We have this whole area of support, right? We take the trend line and extend it into the future, and prices traveled there. So we wonder if we'll get a bounce from this area. And if we bounce from this area, then then the current rally that we're seeing is temporary, right? So we'll see. Actually, because we're in month end, the new month we're starting non-farm payroll, and we could see a break of this trend line. We're currently in the 99.00 area. Bulls versus bears. I'm actually I'm slightly bullish on this. Okay, so let's go ahead and move right along. Let's go ahead and move on to the euro. The euro is called the anti-dollar, and we can see that we're moving out to our higher time frame, using multiple time frame analysis, starting from the higher, bigger picture, right? And if we go back, you go back enough, we really haven't gone anywhere too far, but we have this downward trend line that extends from 2018, right? And then we kind of hit that high recently, right? But we're trapped in a really big triangle with, but we're near a significant level of resistance that we can see that we've hit. There's these zones of resistance that we hit, and then we're in this kind of like resistance zone, as well, right? So we can actually take a rectangle and draw across there that we're in this kind of barrier that we've hit, like a head and shoulders there, but there's pockets of strength in this, right? You could short this and get crushed like today, right? But so let's zoom in on what's going on here. We also have a number of support zones, right? Along the bottom, right? We've got this the support area here, and we have this in the 9,500 area. But you look at this zone here in that 107 to 104 area, 104.97 area, right? And lots of congestion in here where we had significant bounces in this area here. And we have this gap of space here and maybe a level of congestion right in here, right? So we're kind of like in between. We're hitting upper resistance, and then we in this area, and we're making some lower. If you look closely, we're making lower highs, right? High, lower high, low, lower high, lower high, another lower high. So this little blip up that we're seeing, might be only temporary, right? So we've also had a double bottom here, right? Which is kind of interesting too. We have some support that we hit off. That 115.89 was hit multiple times, and we just rocketed it off from last night, and that's what's going on. But we're going right into resistance, right? So we're really trapped in a box here, right? If we can break out above, if we get outside of this zone, get outside of 116.64, we could see a move higher, right, to our next level of resistance, which would be this whole area of 117.83, right? And there's lots of, I'm using Heikin-Ashi candles. This is what we use when we teach our traders how to analyze the market. It's really simple: red, sell, green, buy, and we can see we create a bottoming pattern here. And so, usually price goes in the direction of least resistance. And I know that might seem kind of contrary, but I'm looking at if this is a level of strong support where we penetrated over several days in May, right? We're hitting a high. We might see a rejection here, which might be short-term bearish, but we might take a break and get a shot at this 117.22 area, right? So bulls versus bears. I know it kind of sounds contradictory. How can you be bullish the dollar and bullish the euro? But I am bullish the euro, okay? And so again, we want to see a confirmation, a break above this 116.57 area, and we could see some more to go. Okay, let's keep it going, keep it spicy. Moving on to the pound dollar, and then walk it through our technical analysis picture, starting with the week. Maybe start with the weekly chart and go down to the pound, and you can see that we haven't really gone a whole lot of play. I mean, we do have a very strong downtrend, right? It was strong, but as you can see that we've been making some higher lows, right? And then we also have the rising trend line, right? We do have some political unrest, or not unrest, but you have some seismic changes going on with Keir Starmer and the UK government. Him getting a no confidence vote basically, and maybe trigger some elections, and might see a change in government. So we haven't seen the pound move as far as the euro because of that little drag, but still it is. And then we have a little bit of an uptrend here. A little bit. It's still positive for the day, up 0.13%. And we have an uptrend. We have an indecision doji on the weekly though. And we can see the daily not really doing a whole lot. We have lower highs. Then we have some higher highs and higher lows. So it's kind of really choppy and very indecisive, right? We have a downward trend line here and an upward trend line rising, forming a triangle at the 134.43 area. And we still have the whole number, the 135, 1.3500 area that has not been penetrated, but we're making a higher low. And usually if you have a higher low, we usually see a same high or higher high. So this is actually positioning itself for a bullish move, a break higher, right? So maybe it's kind of like got left behind in today's movement, this week's movement, but maybe in June we might see a little bit of a break north, and we can even a little Fibonacci expansion on that. 100% expansion takes us into like the 135.76 area, with a possible chance to move to the 127% expansion at 1.3654. So bulls versus bears. This is actually shaping up to be a lot easier to look at. A higher low right here. We could probably see a move back toward the 135.00 area in the coming days ahead. So bulls versus bears. I am bullish the pound dollar, also known as cable. Okay, let's keep it going, keep it spicy. Let's look at the Aussie dollar. Here is the Aussie dollar, looking at the weekly chart, and we can see that Aussie has been on fire. It's just been hanging in there with maybe some slight pullbacks, but still making some headway to the upside. Right, higher highs, higher lows. Yeah, we're in the shadow of a very big downtrend, right? And whether we have broken that trend line here, right? This is where we had a trend line break back in January, early January, right? And you can draw maybe a trend line off of here and this rejection point here, right? So we have a new trend line connecting this swing high here and this one here, the high of May 11, 2026. We got up to like 72.74. Haven't been able to get back there, right? But we might challenge that. We're making higher highs structurally. When you have higher highs and higher lows, the tendency is that we will see a same high, actually a retest of the 0.7165 high that we had back on May 4th, right? So that's but we look for, if we do break below the low of 70.70, then we could probably see a move lower. We wouldn't really cause this trend to end unless we broke below 68.44. So that's now, if we settle the Iran war, if it settles, hostilities are ceased, look for this to break out very strongly, right? Maybe even filling the gap. There's a gap here from 72.85 all the way up to 76.51, right? And so we could see a very strong move, as we get closer to some type of resolution of the area. Aussie dollar is very sensitive to, is there a risk-on currency? So when you have good stock markets, positive news globally, I love the Australian dollar. It's one of my favorite currencies to trade. In fact, I'm in it now, and up a few pips there. So bulls versus bears, I'm a perpetual Aussie bull. Okay, we can jump right into the Kiwi dollar. Actually, Kiwi has been a lot recently. It's been relatively stronger than the Australian dollar. And there's always something. When I talk, Boris Schlossberg used to work for the same company I work for. I used FXCM, where we used to work, and I met him, on the subway in New York one time. And he told me about the Kiwi dollar and the Australian dollar, almost like time travelers. It's almost like, since they're on like the other side of the world, that if you see Aussie moving up, usually that's a good sign that the stock market, U.S. stock market, and it's going to go up. The dollar is going to go down. It's more of an anti-dollar trade than the euro, actually. maybe because it's geopolitical, the way it's located situationally with China, with exports, and so it's very a good proxy. When we see a big run up in Aussie, it's usually ties in. If you actually go to compare symbols, if you actually put maybe the S&P, the ES or SPX, I use SPX 500, I use the CFD, and if you put them on top of each other, right, you can see that this is the SPX, and you can see that you get the same rises, the same dips that you see in the S&P 500. You get those same dips, the same magnification that you see, like the drop here. You see a drop in the Aussie. You see the rise here. You see the rise in the S&P, the rise in. So whether it's what they call causative, or coincidence, you see that match, right? So you can see that's a good proxy for the U.S. stock market. Okay. So in fact, the U.S. stock market's been up, and we can see that even though we have had a longer-term bear trend, the most recent price action, the hard right edge of the market, which is the hard right edge, right, is that we are making higher highs or higher lows, right? Even though the market has been like moving kind of down like that, we have an almost an ABC pattern. If you go to a daily chart, and you can actually see that ABC pattern work out. An ABC pattern is relatively bullish, where you have your A, B, and you look at your C. Either it'll be the old high or an extension, right? You can actually take a Fibonacci expansion off that, right, like this, and then you can get typical high. I drew it exactly. 61.15, and we're currently at 59.32. So we could see a continued move in Kiwi dollar. So bulls versus bears, I am bullish Kiwi dollar. In fact, you can look at even a risk reward, going long. If you're looking at entering something like that, you're looking at, and this is not a trade recommendation, but your risk reward is pretty well defined. And it's a 1.72 risk to reward, right, for the Kiwi dollar. Okay. All right, let's keep it going. Okay, we covered that Aussie and Euro. Let's go ahead and go to gold and move all drawings. We're at the weekly chart. A huge uptrend, beautiful uptrend in the market. This just kind of a very we've got these higher highs, higher lows, but recently we had a high, all-time historical high. Gold's never been this high ever in the history of mankind, 5,612.11, and then we had a correction, a 1, 2, 3, 4, 5, or A, B, C correction, right? Three-way correction against the trend. We teach Elliott Wave in the Elite Traders University. And, if you go to Elliott Wave International, they charge you about $12,000 or $18,000 for 12 days. And we give you a full year for under that price, and teaching you how to actually use Elliott Wave to your advantage, right? And we can see that if this is a three-wave correction against the trend, well, then now we have an impulse wave that we're starting right now, right? Of wave 1. From wave 2, and what comes after 2? Oh, I don't know. A 3, right? 3, 4, 5. Well, 3, 4, 5. We don't know how far, but hey, all you care about really is the end of 2, right? That's how we teach people how to find the end of 2, right? Because we can get a break, of gold above the above 45.85, then that's going to set off a massive. That's why I have an alert. See, I have an alert set. I have my alert set. I have it up there, but I'm going to bring it down because I'm basically a trailing buy stop. When that line crosses, that's like a rabbit trap. Boom, snap. We'll probably see gold rally back to new highs, right? And so Great spot if I were advertising for physical gold. In fact, I want you to check out Gold and Beyond in Las Vegas. I was actually there with my niece, and she was selling some gold. I was buying some silver, and we showed this like exchange, but she had some jewelry, and they do a great job over there. There's Derek over there at Gold and Beyond. Say hello. Derek is a great guy with Dixie over there too. They work at Gold and Beyond in Las Vegas, Nevada. Tell them that Greg sent you, and you can get gold coins, you can get gold bullions, they have silver bars. They also have luxury items as well, like handbags and things, high-end luxury items as well. So Gold and Beyond Las Vegas is over there off of Flamingo, right? Or no, actually off of Sahara. My bad, off Sahara. Okay. So here we go. Trend line break, color change. We look for this, and you'll thank me later, right? Again, this is not a recommendation, but this is what I look at when I look at the markets. How I use Elliott Wave is I use it to anticipate. If I know where 2 is, then I know where 3 is. And according to Ralph Nelson Elliott, who wrote this back in 1934, Wave 3 is the strongest, most powerful wave in the market. So if you can find 2, then you're looking at a 2-to-1, 3-to-1 risk to reward on something like this, on a move. If you can find the 2s, I just basically take, I'm going to get a jersey, the number 2 jersey, where if you can find 2, you could make money in this market, right? It's trading very simple. I tell people, if you can count to 5 and know your ABCs, you'll make a ton of money, right, with this market. And look, I drew my wave 5 to 1.618, typical Fibonacci expansion target. That's 5,748.18. So you can imagine if you got in, we're able to get in, at my key price, and then take a measurement objective to that. Then you're talking about a pretty big move, right? It says 100. That must be like $100 move, right? $100, $100, yeah, $1,000 move, right? So that's $1,000 move in silver. I mean gold, $1,000 move, right? So keep that in mind. That price 4,621.44. Set your alarms, babies, and then let's get going. However, this is a weekly chart. Let's drill down on gold. The daily small body candles, lots of red. If you were to get long, you're going to get screwed, right? Because why? This is ABCing out. A, B, see you later. Long wicks, so buyers are stepping in, because we're not the only rocket scientists looking at this, right? I'm sure there's AI and algos. They're already formulating this, and then you just draw a supply line across the top there. We're looking for, again, breaks of that blue line, right? And then we're looking for a pop higher, right? And so you got going down the lower time frame charts, you're going to find your entry. A lot of times people say, stay away from the lower time frame charts because they're so wicky. But if you get down in there, you can see, hey, buyers are already starting to accumulate, right? Buying off these lows, and we're almost near that trend line break. And I might need to move my alarm down a little bit lower to because the closer you can buy the support, the lower your risk is going to be, right? So the lower, hey, if you can get in here, right, then guess what? See how the risk is small, right? This is your risk, right? And you say, well, I won't wait for confirmation. Well, if you wait for confirmation, you're a dinosaur, right? Too much confirmation means that you're entering higher. But guess what? If you're entering higher, what's going on is you are going to, okay, you wait to here to enter. Look how your risk has gotten larger, right? So by going down to the smaller time frames, you can lower your risk into the market, right? So that's why we scalp off the 15-second chart. Okay, anyway, enough of the trade secrets I've given away, and no extra charge. And remember, it's coffee hour with Greg, and I'm almost out of time. Let's look at silver. XAGUSD. He said, well, that doesn't even spell silver, Greg. I know. I didn't invent it, guys. I just trade it. Okay. Same thing, right? You've got large move. According to Ralph Nelson Elliott, the largest, most powerful move is your wave 3. And then we have our 3-wave correction against the trend. He says we usually have a 3-wave correction against the trend. And he said this back in 1934. The guy's been dead for a really long time. But what he says, they call it theory, but that looks like a 3-wave correction against the trend, right? But it could go lower. Yeah, it could, but he says there's a 3-wave correction against the trend. And Ralph Nelson Elliott studied 75 years of price data with newspapers and a ruler and graph paper. And he figured out this without sophisticated computers. And we're using it now. We can constantly see, yeah, the guy was right. 3-wave correction against the trend. What comes after C? Well, there's no D, right? And I tell my students, you better not say, if I say what's after C, don't say D. Ignore the ABCD thing. And then just go right here, right? What comes after C? Wave 1. What comes after 1? Wave 2. What comes after 2? Wave 3 later, right? We even say that. ABC, you later. 1, 2, 3 you later. 1, 2, 3 you later. Wouldn't want to be ya, right? Same thing. We're looking for a break, maybe above 78.53. And if you want to be more conservative, right, you can look for a break above 8. You may be liberal, but hey, you want to save money, right? 89.68. There are a lot of stops right there because there's a lot of people who are short. They think this is going to go down lower. They think it's going to go down to 30 or 40. So guess what? They're going to get short. They're going to place their stops above that high. They're going to go, they're going to go, okay, this is my stop. I'm going to place my stop right there. And I'm looking for, so there's people who are looking at this, right? And that's their stop. So when price runs up there, that stop is a buy order for a bear. So the bears are buying. Bulls and bears buying, that's what creates wave 3 is the largest, most powerful move. Ralph Nelson Elliott studied this back in 1934. He said, hey, wave 3 is the most powerful move. Why is the most powerful move? Because bears are buying because their stops got hit. Bulls are buying because they're greedy and they buy the breakout. So you got bulls and bears both buying for different reasons. One's buying for protection of their account. The other is buying because they see a capital appreciation, right? They see a rise in the market. So now you have, it's not bulls, we call the show bulls versus bears, but we get bulls and bears both buying for different reasons. That creates the strongest, most powerful moves in the market, which is a wave 3. And at this point, at this fulcrum, right at that point is where bulls and bears will be meeting. And that's the order imbalance that people talk about, which will catapult this forward, right? And so that's what I define in Elite Traders University, what we define as a trade, right? You don't want to be in a trade unless it's a point where bulls and bears have to make a decision. Bulls are making a decision, they want to make money, so they buy the breakout, and bears want to get out of the market to protect themselves, creating this enormous amount of volume, right? And at every point, there's always that teetering point. And when we break that teetering point, and you see it over and over again, bulls versus bears, we break that point, big volume, because bears are buying to protect themselves. And you can hear the screams as prices make new highs. Right now, the bears are thinking, hey, we can take this lower. And they are having a tough time bringing this lower, right? So bulls versus bears, I am bullish silver. Okay. Let's then take a bonus when they give you oil, and we look at oil the same kind of way. We see this huge movement. We can see that we are maybe making a lower high. We made a higher low. We make a lower high, right? And we're unable to make the same high of 124.16, and we're topping out right here, right? Lots of wicks there. So we are seeing that we could see a, we had our three-wave correction against the trend, 1, 2, 3, big three, right? Actually, this could be our three-wave correction right here, right? Which we had, right? Uptrend, A, B, and then this is a really big C, right? Sorry, this one's three-wave correction against the trend, right? So we had our 1, 2, and then the big move up, and then we had our move up again, right? So we had our ABC, and then we had maybe a three-wave correction, a three-wave reversal, right? 1, 2, 3, 4, 5, almost like a double top. And now we're probably going to start a correction down in oil, right? So we can move out to our daily, and we can see, you say, well, that wick went a little higher than that, but actually the close, you really look at this, you look at the closing candles, right? That's like our double top formation, and maybe we're starting our new, a reversal would be an impulse move down, or we can look at, we could probably look at something like this, where this is 1, 2, and the 3 is starting, right? 4, 5, right? The alternative count, which I always tell my students, you gotta have an alternative count, right? The count could also, it's like a binary event where, okay, we had 5, maybe this is just A, B, C, right? We have to come to, at least to the old low of A, right? And then we can start a 5-wave up, right? Let me know in the chat box if you found this helpful. I'm like talking to the wind. It helps me, it encourages me. I also like, subscribe, share, get the algorithm, let people know what we're trying to do here, trying to empower people to take control of their financial future and not rely on technology, not rely on their job, but being able to look at the markets and place intelligent trades to make profit. Okay. So anyway, that will be the alternative move, right? And so, we have humans involved here. If Iran is stubborn, we could see a move higher with the with oil, and then we have our line in the sand 107.47. But I think we're closer to an end than to a continuation of. We might have a little bit of continuation of hostilities, but we have a lot of oil. There's a lot of oil on ships, millions of barrels on ships. The U.S. is cranking out ANWR, the reserve strategic oil reserves in Alaska. So there's a lot of oil that once hostilities cease and all that oil hits the market that's been pent up, we could see a plummet in oil like we had before, where we got down to negative oil. If you look at U.S. oil, if you look at the where we actually went negative, right? We went down to negative, where it was more expensive to store oil than to keep it, right? So we actually got to negative prices in oil, where we had a large supply of oil hitting the market, right? And we had the COVID, no one was driving anywhere, and we had negative oil. But went from negative extreme all the way up to, when we had the inflation under Biden, 129.35, and oil was, gasoline was $5 a gallon back then, right? And then we just, sideways, drill baby drill, right? That lowered prices for a little bit. But look at that, double bottom right there, right? And this was before the war. So you knew that people were kind of like, look, well, I saw the double buy. I said, something's going to happen because we're not penetrating here, and somebody knows something. And then boom, Operation Midnight Hammer, and boom, we shot back up. And we actually are heading back we hit, basically, there's a double top here, guys, a bigger double top on this larger time frame here, right? And, we can see back $54 oil, or we could come back and test the low to negative, right? With that huge supply of oil. So don't worry, guys. Don't be a panicking. Oil prices will, usually we have oil prices hitting new highs, and then they go back to very strong lows. And in fact, I started trading commodities when I first started trading. My very first trade was a soybean trade, and I tripled my money, 300% in soybeans back in 1995 or so. My very first trade was a winning trade, right? If you look at wheat, which is right, we're doing the same kind of thing where we've been kind of basing on the wheat, and we just broke out from a consolidation, right? And we have like higher prices for fertilizer and things like that. You can trade wheat. I think we just had a breakout on wheat. We gain breakouts on commodities in general, right? But you can apply technical analysis to any market. Just like people they'll say, well, Greg, you just trade Forex. I trade options. I trade stocks, and I don't want to. I go, you know what? Do you know how to drive a car? Right? Can you drive a Ford? Yes. Can you drive a Mercedes-Benz? Yeah. Can you drive a Chrysler? Yeah. They all have steering wheels, right? They all have brake pedals, gas pedals. Yeah, some of them have touch screens, and some of them have apps, and some of them have air conditioning and power steering and sunroofs and stuff like that. But the basic way to drive a car is put your hand on the steering wheel, unless you get a self-driving car, and you just drive the car, right? The mechanics and the fundamentals are the same, right? So once you learn how to drive one market, you can drive any market. So that's one thing that you can actually take it to the bank, right? Now we're doing a challenge. We're doing our really cool challenge. We're going to do our $50 to $15,000 challenge. And so I would love to have you be part of that, our 31 days to $15,000. And we're going to, let me go ahead and share that screen with you right there, right? So you go ahead and enroll. You go to Elite Traders University, right there, ETU 15K challenge. I'll pop that in the chat box right there. And you can join me for our June challenge. And it's just $127. And you get a month with me, live trading the market, one strategy, one time frame. And I'm tearing up. I'm so excited about it. $50 to $15,000. You get our spreadsheet, some powerful indicators and tools, and a vibrant community of traders, all moving down, compounding their accounts in a responsible way using a disciplined approach. Okay, so if that's something that you're interested in, go ahead and click the link. I'm ready to take control. Enter your email name, email address. Click I'm ready. Go ahead and pay your registration fee, and you'll get access to our suite of tools like the Trade Navigator and also our Trend Spotter. And then we meet at 7 p.m. Eastern time. From 7 p.m. we trade the Tokyo market from 7 p.m. to 9 p.m. Eastern time, and we trade the markets. We set it almost like more of a day trading than a scalping. We actually set a trade, set it and forget it, and go to bed, wake up, and either we're stop down, we make money, and you're using a high probability system. Sometimes we make more money than we actually get stopped out, right? And we just basically move down. The compound strategy tells us our position size, our lot size, and our 50 to 14,242. But then we'll take it to 15,000, right? Okay. So with that said, okay, I want to thank you so much for being here with me on Bulls versus Bears, a strategic market forecast. My name is Dr. Gregory McLeod, and I look forward to seeing you in the markets. Happy trading, happy pipping. Bye-bye.